Hi, this is Ken Boyd. This is the Accounting Accidentally website. And I wanted to cover a blog today warning the healthcare Cadillac tax is coming soon. This is one of the outcomes of the Affordable Care Act that doesn't necessarily have an impact now, but will have an impact down the road and will have a pretty substantial impact on people's personal financials. So let's go into the article here. And I mentioned one of the great advantages of working for a company is those company paid benefits, particularly healthcare related benefits. I think we all know people who work at companies not primarily for the wages, but primarily because of benefits they get, like health insurance. And that's why some people stay at companies and don't become self employed, because obviously it's more expensive to have health care if you're self employed for the most part. And I mentioned here in the first paragraph that a new excise tax on healthcare benefits may have a huge impact on your personal finances in the next few years, just a few years down the road. It's called the Cadillac tax, for lack of a better word, and I mentioned that it's part of the Patient Protection Affordable Care Act, which you can get at over here. I'm going to clear that drop down. So it's healthcare.gov. Here it is, Patient Protection Act and Affordable Care Act. You can get to that link through the blog. The legislation imposes a 40% tax on the value of healthcare programs above a certain dollar amount threshold. And it's called the Cadillac tax because it's designed to tax the most generous healthcare programs. Now, here's the difficult thing, the vague thing. It taxes healthcare programs. And what we're going to find out in a minute is that it is not just the bread and butter, plain old vanilla medical care that an employer pays for. It is not only the medical care that your employer pays for. The tax is on more and a broader range of things than just that. And that's why I wrote the blog. So, great article here. I have the link to Towers Watson, a healthcare consultancy company. It says nearly half of U.S. employees expect to be hit with the healthcare Cadillac tax, with 82% triggering the tax by 2023, assuming nothing else changes. So I make some of the points here in the blog post. The cumulative effect of the tax is estimated to be $78 billion over that 5-year period starting in 2018. And I also thought this was interesting. This is a tax that is not deductible by the employer who pays the tax. And since it's not deductible, there is no tax benefit. It has a bigger impact on company earnings. And since that's the case, they may take more action to avoid the impact or get the costs recouped to them, which I'll get to in a minute. Casting a wider net, like many taxes, the devil is in the details. And the issue here is that there are factors that allow the excise tax to cast a wider net, tax more dollars, and this has to do with the definition of a healthcare program, quote unquote. The first thing is that it's not just medical premiums paid by your employer or the company. The employee portion of premiums is included as a benefit. Now, I think it could be argued that the portion that the worker pays is not a benefit because the worker's paying it, but that is included. Both the worker contributions and the company contributions are included as part of the value of the program. And as I mentioned a minute ago, it's not just the medical care. The excise tax covers flexible spending dollars. Many of you have that, where you do flex spending dollars and you can spend those dollars on things that you choose to, like childcare reimbursement, for example, healthcare reimbursement benefits, and pre-tax contributions to health savings accounts. All of these items are part of a healthcare program and subject to the excise tax if you're above the dollar threshold. So I say here it's more than just the value of medical coverage, and that you need to distinguish between the value of your medical plan, A, and the benefits you get and the benefit the company gives you to pay for that plan, B. Okay, it's not just the benefit, it's the dollars you're given for the benefit. And you'll notice that they're taxing they're including, for the excise tax purposes, pre-tax contributions. And perhaps the biggest impact is that the potential liability, tax liability, is indexed to inflation, and specifically to CPI, the Consumer Price Index. You can click on the link here if you want to know more about CPI, which essentially covers the overall increase in retail prices over time. And here's the problem. The problem is that inflation is increasing at a much slower rate than the increase in healthcare costs. We might have a situation where CPI goes up 1.5% to 2%, but healthcare costs can go up much more rapidly, 5 to 10% or even higher. So the result is that your healthcare program is climbing in costs at a much faster rate than inflation, and before you know it, you're above the threshold and you're subject to the tax. Now, all that being said, what's the impact on finances? Well, first bullet point, a firm may offer less attractive benefits to avoid going over the tax threshold. The company that's subject to higher tax, and remember that tax is not deductible, may pass on the cost of that tax to employees, and that cost is to recover the company's cost of the tax. So you may end up, as an employee, a worker, paying higher costs than you otherwise would for your plan because your company is subject to the excise tax. And probably the most serious consequence is that this additional cost and the complexity may mean that companies limit the number of workers they hire that are eligible for healthcare benefits, simply because it becomes more and more expensive and complex to manage the benefits and the costs of having workers. So I suggest here, pay attention to how your employer is addressing this Cadillac tax issue. If you see things on your company website, you get mailers, you're at a benefit meeting with your benefit plan administrator or whomever in your business, pay attention to see how this will impact you down the road. So that is my blog about the Cadillac tax. Remember that if you click on the link, in fact, right here, webinars, writing services, video production, you'll get to my Work With Me page where I talk about how I create video content through accountinged.com, the blogs, articles, and web pages I write, webinars I give, and speaking as well. And one more thing, we'll click over and show you accountinged.com, which is the online training business that I'm involved in. And you can click here on the green button and try it for free for 3 days. Thanks very much for watching, and we'll see you next time.